There's a new stimulus proposal on the negotiating table in Congress. Boosted monthly benefit checks are going out to millions of people. Lawmakers are finally responding to the calls for a fourth stimulus check. Now everybody, and Representative Horsford told reporters today, in this time of crisis, we cannot continue to allow big oil to price gouge Americans at the pump and put profits over people. Now the SAVE Act, which is being introduced, it's a new announcement, and the legislation stands for Supporting Americans from Vehicle Energy Cost Act. It will provide a monthly refundable individual income tax credit of $300 for car owners. According to a fact sheet, the tax credits will be allowed to taxpayers residing in the U.S. Payments would also be capped to individuals earning no more than $200,000 and joint filers earning no more than $400,000. When asked whether more relief will be sent out, Representative Horsford said, "Every day, I hear from Americans about the economic hardship rising gas prices are having on their budgets. Oil and gas companies are making record profits at the expense of middle-class and low-income people. That is why he is fighting to provide tax credits, to provide price relief to any constituents." Now, it's really great to hear that lawmakers are finally taking action. Now, Governor Eric Holcomb also announced that 4.3 million taxpayers in Indiana will receive a state tax refund. In a press release, the governor said, despite a crisis, Indiana exceeds all expectations and closed the state fiscal year with an unprecedented amount in reserves. We have an obligation to put money in the hands of taxpayers instead of leaving it in the hands of government. Now, the refund amount is $125 and represents 12% to 13% one-time tax cuts. And according to state officials, the refund payment will be sent and separate from any taxes owed or refund due. Individuals in line for an income tax refund will receive both the regular refund and the automatic taxpayer refund. Holcomb said that making the automatic taxpayer refund separate payments will allow adults in the state to qualify for it. Now, the U.S. Bureau of Labor Statistics has also released their summary of the U.S. employment situation for March 2022. The standout information is the further decline in unemployment, now down to 3.6%, as well as non-farm employment rising by 431,000 people. Though this number was slightly down on estimates of 450,000. Compared to a month ago, the signs are still positive for the U.S. economic recovery. However, inflation is still at record levels and is yet to show signs of slowing. The number of unemployed people declined by 318,000 to 6 million. This is the closest that the economy has reached since the crisis began in March 2020. Job growth of 61,000 occurred in food services and drinking places, and 25,000 more in accommodation. This compares to the more than 678,000 jobs in the month of February. Overall job growth averaged 562,000 per month in the first quarter of 2022. To address the rising inflation, the Federal Reserve has already approved its first interest rate increase in more than 3 years, after keeping its benchmark interest rate anchored near zero since the beginning of the crisis. Now, this will bring the new rate into a 0.25 to 0.5% level. Stimulus checks are approved by the end of the month. So over the past few weeks, claims for the unemployment benefits have only been increasing, and this makes the need for more stimulus payments just more important. Now, as the country unemployment rate grows, more lawmakers are considering this to be the perfect time that is, to send out for stimulus checks. And right now, Americans are eligible to receive these payments for up to $1,500. So in this video, you're going to learn two things: when the stimulus checks are going to be sent out, and how President Biden is going to approve a fourth stimulus check. Now, if you receive the SNAP benefits, then make sure to watch to the end of the video, because it gets really important. Food stamps are one of the most important staples of the American economy. They're actually the sole reason millions of people during the crisis had food and groceries on the tables. Lawmakers in the Biden administration know that keeping expanded food stamps and benefits and even improving the program would be a great way to gain votes. So emergency food stamp benefits are always available to people and SNAP applicants.
I ask unanimous consent to address the House for 1 minute.
Without objection, the gentlewoman is recognized for 1 minute.
Madam Speaker, I rise in support of the Restaurant Revitalization Fund Act, which included an amendment that I worked on with my team and many of the folks that led this effort to prohibit the funds from going to businesses who have committed wage theft against their employees. This simple change will make sure that our valuable federal dollars are being used to support businesses who do right by their workers, not those who rip off their workers and steal their labor. There is no doubt that a thriving restaurant industry is good for everyone, but it's workers it's the workers who really make the restaurants and businesses who they are today.
Gentlemen, good morning to you both. Brendan, I'll start with you. The fact that we have seen transports sell off in recent weeks, a lot of it led by many of the freight names amid concerns about the rollover we're seeing in freight rates, particularly in certain segments of trucking. Contextualize that for us.
Yeah, Morgan, good morning, and thanks for having us on. And look, the pullback in transports relative to the market here in the last month has been over 15%. We've only counted that type of relative underperformance maybe 3 times in the last 30 years. So definitely something to pay attention to. Look, everyone remembers Omicron a couple months ago. Labor availability went down across the supply chain. That's why trucking rates actually peaked back in December. We've now come about 20-25% off of those peak trucking rates. So a lot of pundits and media folks have said, wow, trucking rates are coming down. That means it's going to be a bloodbath for transports. But in reality, it just means that some of these supply chain constraint issues that we were seeing when we had to ration capacity are actually coming off. So we're getting goods and services now, flowing through the economy, which we think is a very good thing. And not all the transport data is negative. If you look at rail volume, it's actually sequentially accelerated through the first quarter. We think that turns positive for the first time in about 12 months here in 2Q. And historically, when rail volume's up, transports actually tend to outperform. So we're actually very aggressive buyers of this pullback right now.
Okay, I do want to get into that a little bit further, but Stephen, first, your take on what we're seeing with the passenger airlines, especially given the fact that it's been a busy week in terms of M&A news.
Sure, absolutely. Good morning, everybody, and hello, Brandon. Certainly, when we look at the passenger airline side, when we look at the last 2.5 years, we've been in one heck of a demand shock. It seems we're now kind of coming out of that demand shock. If one looks at daily TSA throughput, we're now just 10-some-odd% below pre-pandemic levels. And from a pricing perspective, what we've seen in our recent work is April and May domestic booking curve. You have fares up 8 to 10% versus pre-pandemic levels. And in spite of that increase, with May actually strengthening versus April, we have not seen any meaningful pullback from a volume perspective. So elasticity concerns have been, I think, front of mind for some investors. That's definitely not what we're seeing. So we are coming out of the demand shock, certainly in a choppy market at the moment, given some geopolitical events. But longer term basis, it looks like a reasonably good setup, especially for those carriers that have de-risked their earnings streams.
Okay. So, Brandon, what would you be buying right now?
I mean, JB Hunt, I think, has pulled back about 15 to 20% here in like maybe 6 or 7 trading days. And for those that don't know,